The first one I'll start with is as an owner and when we were purchasing some properties. So we bought a package of single family homes. It's got decent cash flow. We'll just cash flow these rehabs as these units come available, right? We were still pretty young, about a year into it. So we bought this package of 16 homes. Once we started managing them appropriately, our vacancy rate went up because people are like, no, I don't want to pay. The previous owner was a terrible landlord. And so everybody was deferred maintenance. Everybody was just done. So we started getting higher vacancies. And so that made cash flowing the rehabs much harder. From that point, we've just worked to, every time we would get a little bit of cash flow, we'd put it into one property and then get it rented. And we were getting higher rents every time. So it was great. But when you have 16 properties that have a ton of deferred maintenance, really hard to get ahead of it and then to take profit out of it, right? So it's essentially just been pouring everything, any free cash flow that these properties generate get put right back into the property. When we bought it, we could sustain, because we got them at such a good price, we could sustain probably a 50% vacancy and still make all of our obligations, which has been really good because, we've flirted with that periodically. And I don't think we've ever gotten as low as 50%, but just knowing that, if we could cash flow all the rehabs at, with 2 vacancies out of 16, when you're sitting with 6 vacant or something like that, that just changes the whole dynamics. I know the market well enough. We can get them occupied really quickly. General vacancy isn't an issue. The vacancy we have is all due to properties not being up to the quality that we want them to be rentable. The whole goal was a reposition of this whole asset. We're like, okay, this is going to be a low C. We're going to take it up to a high C, low B. Right? It's in a small town outside Kansas City. So we're like, okay, well, this will be an easy reposition. And it really doesn't take $30,000 to rehab one of these units, right? But we're looking at $15,000, or if we need to get a new roof or a new HVAC, they just start to, it all starts to add up across the whole portfolio of the houses. Now, we were planning on being able to get the occupancy up, get it up, have maybe 1 vacancy, and then try to do a cash out refi and, just kind of rock and roll and put everything into the next property. But that hasn't happened yet. And then also being in a smaller tertiary market, it's making, a refinance a little bit more challenging. So we're in the process of trying to do a cash out refi because we came in with a really good LTV. We're trying to work to do a refinance, but now given the current market conditions and the fact that this is a smaller town, a lot of the big banks in Kansas City don't want to touch it. So we're stuck with limited options on some of the smaller rural banks, which are also getting us, our terms aren't as favorable, which is another thing, another lesson learned. We never got a hard LOI on what our bank terms were going to be. We had gotten a verbal that we were going to get a 20-year amortization, and then the closing table, we got a 15. This was a big lessons learned all the way across the board. If we're going to do a project like this, and I've done it before on a reposition of 6 duplexes on another LLC that we have, is take out a construction loan. Don't try to cash flow it. My biggest lesson learned was take out a construction loan and then have your back end financing, at least a really good idea of where it's going to come from. Know that you've got a decent option to roll into if the bank that's doing it says, hey, we'll give you 6 months or 12 months or whatever for your construction period, and then we'll roll you into a 20-year fixed product. At least you've got that on the back end, despite, knowing that, hey, well, I'd really like to have a 25 or a 30-year amortization depending on the property. So those 2 things between the high vacancy and the no construction loan, and then the amortization getting shortened at the last minute, really kind of made this deal a challenge. We're still shopping around for additional lenders to try to refinance it, put us into a construction loan. We've got some opportunities. Started working with more of a broker instead of going directly to the banks. So it'll cost us a little bit to use the broker, but we'll at least get something done.